We just witnessed a brutal earnings reaction. Q1 2026 just dropped, and despite Robinhood posting record-breaking business metrics across the board, the stock is completely collapsing. It's the ultimate paradox of price, a massive glaring disconnect between execution and valuation.
But the price action alone is actually hiding three crucial things. It's hiding the rollout of Robinhood chain and tokenized real-world assets. It hides the pending integrations of their massive global Bitstamp acquisition, and it completely masks the exponential growth of their new prediction markets. Still, we have to look at this momentum directly and really feel the pain of this volatility right now. The post-market drop is absolutely severe, plummeting straight down to $74.41. That is a brutal negative 9.33% drop in an instant. You're looking at a 40.91 forward PE, a 4.23% short interest, and a massive $75.62 billion market cap taking a severe hit. Just look at that huge 52-week range, swinging violently from $45.56 all the way up to $153.86. The momentum is merciless, and yet.
Let's step back and look at what this business actually is in 2026. Because Robinhood is no longer just a meme stock casino. Not even close. They operate on three massive revenue pillars now. They pulled in $623 million in exact transaction-based revenues. They generated $359 million in net interest revenues, and they added $85 million in other revenues. We're looking at a fully diversified financial machine.
But what's really fascinating here is this single, deeply human number, $26.5 billion. Robinhood's retirement assets under custody increased 102% to a record $26.5 billion. I want you to think about what that detail actually means. Ordinary, everyday people are trusting this platform with their actual futures, their life savings, and their retirement.
Which brings us to the bull case, and the man orchestrating all of this. CEO Vlad Tenev isn't just running a brokerage anymore. He's aggressively positioning himself as an architect of the next generation's wealth. Listen to how he frames this. Quote, "Driven by our relentless product velocity and innovation, Robinhood is increasingly positioned at the center of our customers' financial lives, just as we enter the early innings of the great wealth transfer."
And look, the hard data immediately validates that ambition. $18 billion. That is the exact amount of net deposits they secured this quarter alone. It represents a massive 22% annualized growth rate. They aren't just talking about building a financial super app, they are actively absorbing the capital to actually build it.
Let's move to his aggressive stance on active traders. Tenev is totally unapologetic about dominating market share against legacy brokers. He stated, quote, "We want active traders to feel like they are at a disadvantage trading anywhere but Robinhood Markets, Inc."
So the million-dollar question is it actually working? Yes, Robinhood Gold subscribers just hit a record 4.3 million. That is a 36% year-over-year explosion. The active traders are absolutely locking in. But here is where the story gets genuinely thrilling. Tenev dropped this jaw-dropping vision on the call. Quote, "Prediction markets, the fastest growing business in our history. I think we're just at the beginning of a prediction market supercycle that could drive trillions in annual volume over time."
Trillions. Let that word just hang there for a second, and to prove it, $300 million, that is their annualized run rate for an incredibly staggering, explosive new revenue stream. But we have to face the music here. The bear case is brutal, and I am not going to soften this blow for you. Wall Street expected total net revenues between $1.14 billion and $1.24 billion. Robinhood only delivered $1.07 billion. That is a hard, undeniable miss, dragged down heavily by crypto market weakness.
The second punch lands plainly and coldly right on the bottom line. Earnings per share completely missed Wall Street consensus. The street was modeling for 39 to 50 cents, Robinhood reported 38 cents. Yes, technically it's a 3% year-over-year growth, but it is a clear failure to meet the market's strict demands. And the third blow is this severe contraction. The quarter-over-quarter drop is just staggering. In Q4 2025, their pure net profit was $605 million. In Q1 2026, it crashed to $350 million. That is a 42% plunge that fully exposes the raw volatility of their underlying model.
But the final punch is the one that really hurts. The Wisconsin DOJ lawsuit alleging prediction markets are illegal sports betting. Listen to me, this isn't some minor compliance footnote that you brush off. This is an existential attack on the very supercycle they just hyped to their investors.
You simply cannot build a multi-trillion-dollar financial paradigm if state regulators are actively trying to shut it down.
So we are left looking at history to understand this immense tension. The bear parallel is PayPal from 2021 to 2022, where the entire financial super app narrative collapsed 77% as growth slowed and the multiple compressed. The bull parallel is Block's Cash App from 2019 to 2021, where they built primary financial relationships for millions of users, and the stock gained 600% from its trough. I'm not telling you which one this is, but here's what I'm watching.
5:30, we need to watch 3 highly measurable signals. First, if Robinhood fails to hold their operating EBIT margin at 47%, then Wall Street will brutally reprice this as an undisciplined tech company instead of a mature financial institution. Second, if prediction markets fall below that $300 million run rate, then the multi-trillion-dollar supercycle narrative is totally dead, and the growth premium evaporates. Third, if net deposits fail to maintain a 20% annualized growth rate, then the super app thesis fails, because it means the massive wealth transfer is moving right over to legacy competitors.
But at the end of the day, the ultimate question here isn't just about PE ratios or basis points. What does it actually mean if ordinary people truly trust Robinhood with absolutely everything? Their daily trading, their IRA, their bank account, and ultimately their children's financial future. If you want to follow this incredible story as it unfolds, please hit the like button and subscribe to This Explainer.